Did you know that history could hold the key to your next big trade? Stay tuned, because in the next 4 minutes, we're revealing timeless lessons from past market crashes and booms that could change the way you invest. Point 1. The Great Depression. Let's start with the Great Depression of 1929. The stock market crash wiped out billions of dollars in wealth. But what caused it? Over-leveraging and speculative trading were key factors. The lesson? Always manage your risk and avoid putting all your eggs in one basket. Diversification is key. Point 2. The dot-com bubble. Next, the dot-com bubble of the late 1990s and early 2000s. Everyone was investing in tech startups expecting huge returns, but many companies had no real business models. The crash was inevitable. What can we learn? Focus on fundamentals. Invest in companies with solid financials and a clear path to profitability. Point 3. The 2008 financial crisis. Fast forward to 2008, the housing market collapsed, leading to a global financial crisis. The main culprit, subprime mortgages and excessive risk-taking by financial institutions. Lesson learned? Watch out for red flags in the economy and be prepared to adapt your strategy when things go south. Point 4. Present-day trading. History has a way of repeating itself. By studying these events, we can make smarter decisions. Remember, the market is unpredictable, but being prepared can make all the difference. If you found these lessons helpful, hit that like button, share this video with your friends, and subscribe to our channel for more financial wisdom. Let's learn from the past to shape a better financial future. Thanks for watching.